Hi there Algo traders! In this video I want to show you a strategy that contains multiple trading approaches combined into one powerhouse algorithm. A strategy that's designed to hunt for precise entry points across different market conditions. A layered approach that might finally contain the best trading rules we are so desperately seeking for when trading this crypto market. So stick around to the very end of this video to see how well this algorithm scores. You won't be disappointed. This strategy can be found within multiple GitHub repositories that contain trading algorithms if you search for it on GitHub. Let's go over the first one here and go over the indicators, parameters and rules for trading on a high level. Otherwise this video will take ages to finish if I were to go over this line by line. Now, generally speaking, you can consider this algorithm as a multi-tool for trading. It does not rely on a single magic indicator, but instead it tries to identify several distinct scenarios where a buy opportunity may arise. Some are looking for dips in a strong uptrend, others for classical oversold conditions with a twist, and some for specific Bollinger Band patterns. But the core idea here first is that the algorithm first tries to confirm a potential broader trend or condition using a higher time frame, and then pinpoint entries on a lower time frame when specific granular conditions are met. This strategy is packed with indicators working across two different time frames, which is a common technique to get a high-level view and then zoom in for the execution. But let's start from the top first. The ROI settings for this algo are set here, and they are set to take profits at different intervals on 10 minutes, 40 minutes and 3 hours, with the following profit targets: 3.8, 2.8, 1.5 and 1.8 respectively. The stop loss is set to 99%, which is effectively disabling it. And this means that the algo will not stop out of a trade unless you set a custom stop loss in the custom stop loss function. The primary time frame for execution are the 5-minute candles, and the informative time frame for context uses the 1-hour candles. The algo is set to use the usual sell signals that we often see in strategy files for frag trade. And then there is a whole section that is used for determining if these buy or sell signals are used in the strategy. You can play around with these to see which custom buy or sell signal looks to be the most profitable one in backtests, and then try to see if these are also profitable in dry runs or live trades. This next large section is used for hyperparameter tuning. You can set the default values of the indicators here, and also the range in which the optimal parameters can be found. And the categorical parameters here are used for hyperopt functions to see if using this parameter has a positive or negative impact on the performance of the algorithm. After this huge section, there are some custom functions: a custom stop loss V8, a normal custom stop loss and a custom sell. The custom stop loss V8 will sell if the current profit is greater than 0, and it will also sell if the current time is greater than 50 minutes after the trade has opened and the candle is below the 200 EMA. However, it's not used in the strategy as far as I can tell. The custom stop loss function is the one that is used in the strategy. It will sell if the current profit is less than 0 and the current time is greater than 280 minutes after the trade was opened. And it will also sell if the current profit is less than the custom stop loss value and the 1-hour RSI is less than 30. The custom sell function is another custom function that is used to calculate the custom sell, and this function is used to determine if the algo should sell a trade or not. It contains 5 ROI targets and 2 trail targets. And the interesting thing here is that these custom ROI targets are also optimizable with a hyperopt function. If the custom profit gets above one of these customized ROI targets, and at the same time the RSI gets below this RSI value, then the algo will sell the trade. And I believe that this method is aiming to sell the position when it knows that it has attained a certain target, and in the meantime it sees that the RSI is getting lower, so losing momentum. After these custom sell signals, we come at a section that is used to define the indicators that are used in the strategy. In this section there are multiple indicators used on the 1-hour time frame, and these are used to determine the trend and the momentum of the market. There are multiple EMAs like 50, 100 and 200 periods, and these help to define the longer term trend. Also a simple moving average is used, here the 200 period, and the check to see if it's decreasing. The RSI is here the standard 14 period to gauge momentum on the higher time frame. And the SSL channel is also used with a length of 20. Now we come at a section where the 5-minute time frame indicators are determined. There are 2 sets of Bollinger Bands, a 40 period with a 2 standard deviations Bollinger Band, and a 20 period Bollinger Band on a typical price, also with 2 standard deviations. The volume mean slow here, a 30 period rolling mean of the volume, and a whole bunch of EMAs like 12, 26, 50 and 200 periods. These are probably used for short or mid-term trend and crossover signals. Here 2 SMAs are used, 5 and 200 periods, and the 14 period RSI. And finally the money flow index, also on the 14 period, to gauge buying and selling pressure. Now all these indicators provide a lot of firepower, and these are all combined into various buy and sell conditions later on. It's just not one buy signal but a collection of them grouped into versions, and each buy condition has a line that checks if the conditions are allowed to be used as a buy signal or not. These were set at the beginning of the script if you can remember. Each condition with these versions combines several of the indicators we just talked about. Again, I won't go over each and every single line of code, because then we'll sit here all day, but I'll give you the flavor. Many conditions require the price to be above key long-term EMAs on both the 5-minute and the 1-hour charts. And then some rules are especially made for dip buying, so in other words, looking for pullbacks. For example, price closing below a short-term EMA while still above a long-term one, or price dipping below Bollinger Bands. In these rules are also volume confirmations that check against average volume or previous candle's volume to avoid low liquidity traps or to confirm a move. And in this section, RSI and MFI levels are used to identify oversold conditions or divergences, often comparing 5-minute RSI to the 1-hour RSI. And on it goes. If one of these signals is triggered, then the algorithm will enter a trade. If you have seen the way these rules have been set up in the strategy and also in other very complex algorithms like the NFIX strategy, then you will see that these are all based on the same principles. The only disappointment I have with this one is that the author did not use labels or tags to distinguish each of these rules. This would make it much easier to find out which of these buy rules actually are making profit and which ones do not work at all. But then again, you can't always get what you want. But now we come to the part that everyone is here for. Eventually, this video has been taking up too much time and we finally come to the meat and potatoes of this strategy. Is this algorithm actually profitable? And by profitable, I mean how did it perform in a backtest and how likely is it that this will also be profitable in the future if we were to use this in live trading. Now, since I don't have these live tests of this strategy, I can't give you realistic numbers here and we have to depend on the results of the backtest to make some assumptions. But let's start first with something super important here, because a strategy's performance is highly dependent on the market, the pairs traded, the time frame, the time in the market, and the market timing. Now most people treat this like an absolute science, but in reality it's more of an art. Given the complexity and the number of configurable parameters, this strategy has the potential to be optimized for various market conditions, but it also means that it could be prone to over-optimization if not handled carefully. But let's begin with the good news. This strategy has performed very well in my backtesting setup. It achieved a hypothetical profit of over 7,300% with an 86% win rate in over 4,600 trades. The drawdown is a very admirable 4% over the backtest period, and if we look at the CHR, Kalmar, Sortino and Sharpe ratios, we can see that these all are very happy numbers. The profit factor tells us that we are making 2.3 times the profit per $1 risked. And what's also important is that almost all of the used pairs can make profits with the algorithm in its current configuration. Now the equity curve shows us very important information about the way an algorithm responds to certain market circumstances. And in the case of the bin-cluck-mad algorithm, we can see that it is prone to catch some very large pumps. When the markets turn bearish, the curve flattens out, but it does not go down. Now I told you that I was not happy that these separate entry signals were not labeled, and here I show you the reason why. All these entry signals are all considered the same entry signal, and so I cannot show you which entry signal was the most profitable. And this is also true with the exit signals. The only separation here are the exit conditions, stop loss, ROI, and the custom sell settings. But at least we can see that ROI target 1 and the ROI itself are the most profitable exit indicators of this algorithm. If we compare the current equity with the other top 10 strategies, then we can see that this is not the most profitable one in the backtest, but it's one of the most stable ones. And in the profitability metrics we can see here that the Algo has almost the highest profit factor, win percentage and pairs with profit percentage. While at the same time the risk metrics are the lowest of all the top 10 strategies. This starts to look like a very solid strategy, and maybe even a good candidate for a live test in the future. Even with the risk-adjusted returns, we can see that this strategy scores very high, and I'm starting to get very curious at which position this strategy will end up in the final ranking of the top 10 strategies. And by opening the strategy league with the personal scorings I give to the performance of these algorithms, it shows that this one ends up at the second spot in the total league. This is a truly surprising result, and I'm very happy to see that this strategy is performing so well. It has been over a year since I have found such a high-ranking algorithm, and it seems to be worthy to be tested in the live environment with some dry runs. So please be sure to test out this strategy on your preferred assets in a backtest first, and use a demo account with play money before using it live. What you see here is just an analysis of a code and not a guarantee of future performance. The settings you choose, the pairs you trade, and the market conditions in which you start the strategy in will play a huge role in its live performance. All my detailed notes, full backtest results, performance reports and all other backtest output are available on my Patreon page. Supporting me on Patreon allows me to dedicate more time to dissect strategies like this for you. It is also a way to verify my work, because I want to be fully transparent about my results. I still get too much messages from people that lose money with these strategies, and when I ask if they tested it out themselves or did some dry runs, then they stop responding, which means that they probably did not do their homework and are looking for a quick fix to take money. But this is not how it works. You need to put in the time and effort to learn how to trade and how to use these algorithms. The real fans know this, and they will be eventually rewarded for their efforts. But if you're just starting out in this field, then don't be discouraged, because the learning curve is steep, but the rewards can be worth it. All you need is to read my book for beginners, and this will certainly make a positive difference in your learning curve. Now thank you for watching, and if you found this video helpful, then please give it a thumbs up and subscribe for more content like this. And I will see you in the next video. Goodbye!